It appears that this year's cloud also has a golden lining, as the saying goes. In recent weeks, the world's financial markets have experienced something out of the ordinary. A gradual ascent that started off subtly has emerged as one of the season's most talked about topics among traders. Gold and silver, two important commodities, have seen significant price increases on worldwide markets in recent weeks. Both of these metals are at all-time highs. This is a straightforward question for many people. Why has there been such a dramatic increase? For what reasons are the prices of gold and silver setting new records simultaneously? How does this reflect the current status of the global economy? We may simplify it by taking it step by step. The facts should be presented first. Worldwide, the price of gold has soared beyond $4,200 per ounce, shattering all previous records. Going beyond $52 per ounce, silver has become considerably more unpredictable. The price of gold and silver has reached unprecedented levels. To put it plainly, just to give you an idea, the price of gold is currently 58% higher than it was this time last year. Silver has also had a significant increase of nearly 68%. Knowing the inner workings of the precious metal can help you comprehend the current rally. Not all stocks are gold. This isn't a profit and loss-making enterprise. You can't compare it to crypto or real estate. Shiny gold is more like a mirror. Human emotion is reflected in it. Accumulating self-assurance leads individuals to purchase equities. Gold is what folks buy when they're worried. Why? Gold is a tangible manifestation of trust. Confidence is lacking. It avoids insolvency. It is not dependent on the word of any individual. From royal weddings to commoners' battles, it has been valuable for thousands of years. For this reason, many consider gold to be the perfect safe haven investment. Thus, gold becomes an investor favorite anytime global unpredictability is felt. Plus, everything seems to be falling apart at the moment. I'll explain it in simple terms. Gold is making a comeback for three key reasons. Uncertainty occurs first. A global panic has ensued. A number of factors, including the ongoing U.S. government shutdown and rising trade tensions between the U.S. and China, have put a damper on global economic optimism recently. U.S. President Donald Trump has threatened to impose fresh tariffs on Chinese goods in response to China's tightening of rare earth material exports to the United States. As a result, everyone is wondering what will happen next. So, they're putting their money into gold and other seemingly safe things. Second, interest rates are a factor. Get this math straight. Banks and bonds are popular places to park savings when interest rates are high because of the healthy returns they provide. The U.S. Federal Reserve is projected to continue cutting interest rates this month, following last month's trend, which is good news for gold prices. Reason being, if interest rates are cut by banks, people will opt to keep assets like gold that do not depreciate in value. The depreciation of the dollar is the third cause. The U.S. dollar is a key indicator of gold's value. Gold tends to climb in value in response to a weakening currency. Due in part to a faltering U.S. economy, and in part to efforts by central banks throughout the world to lessen their reliance on the dollar, the currency has been struggling in 2025. The accumulation of gold by central banks is another factor behind this price increase. A strong undercurrent of backing from global central banks has been noticeable as of late. In an effort to diversify their holdings away from the U.S. dollar, several nations, including China, India, Turkey, and others, have been purchasing gold in large quantities. I don't understand why people are hoarding. The main focus is on reducing risks. Due to its independence from national economies, actual gold is considered as a secure investment following moves like sanctions on Russia. Here, though, it's more than simply gold. Another metal that has gone boom is silver. Reason being, silver serves dual purposes as an industrial metal and a precious metal. You can find it in solar panels, electric cars, medical equipment, and electronics, among many other places. Furthermore, silver's demand has skyrocketed due to the global rush towards renewable energy. However, supply has lagged behind demand. Exploration expenses have increased. Stock levels in the warehouse have dropped. Therefore, the disparity between supply and demand is becoming wider by the day. As a result of this timeless demand-supply imbalance, silver prices have risen at an even more rapid pace. To sum up, silver isn't merely riding the wave that gold is riding, it's surfing its own wave. Although gold is more visually appealing, I believe silver will be more practical in the long run as we construct these data centers. There is a noticeable uptick in the price of gold and silver in India right now. The arrival of the festivals of Dhanteras and Diwali typically causes a spike in the demand for gold. Things are more tricky this year. The amount of physical gold that people buy could be affected by the price increase, according to some analysts. Since gold is associated with traditional values during Dhanteras, some people don't think demand will go away. Now, here's a country that does more than just buy gold. It celebrates it. But this year, some may choose less heavy jewelry or even gold coins. An underbelly to this gold rush exists as well. Gold and silver are largely imported into India. An increase in import costs due to price increases also strains the rupee and widens the trade deficit. Russia and Ukraine are the means by which the United States is obtaining this for its own benefit. Now it's China and Taiwan, after Israel and Hamas. This is to say the BRICS, their group, and the secure investment vehicles of gold and silver are growing. This is why the world's central banks are buying gold and silver, and why there is real demand for these precious metals. What follows next? As traders assess the publication of macroeconomic data and political developments in the U.S., gold prices are anticipated to remain volatile in the upcoming week. This suggests that the broader trend will likely persist. Why? Because the factors that are currently pushing gold prices, uncertainty on a global scale, purchases by central banks, and declining interest rates, are not going away. Even major financial institutions like Goldman Sachs are projecting that the price of gold would reach $5,000 per ounce by the year 2026. Although the luster of gold and silver may last for a while, it's unclear if this will be beneficial to the world economy. The metals do well if there is a sense of global instability, a spike in inflation, partisan divisions, or tremors in the market, and these factors are currently combining. The recent uptick in the price of precious metals is driven by a desire for security rather than greed. It's a warning that investors are getting ready for a world of uncertainty and distrust. These precious metals represent more than just money. They can evoke strong feelings, a sense of history, and even dread. At this moment, it appears like they are telling us the truth about how the world really feels. A glimmer of terror has returned, and the world is fretting.